Yeah. If you're happy, Andrew, I'll disappear into the background.
Yeah, okay, I can do all the intros now, I think. Yeah, thank you.
Yeah, okay. Thanks. See you later.
Yeah. Good morning, everyone. Welcome to our Friday lunchtime webinar. We're expecting quite a few people today, so just bear with us. We've opened the doors. People are coming in all the time. So I hope you're well. Looking forward to the weekend. I hope the weather isn't as bad as it is here in Somerset. It's been wind and gales and rain for about the last 4 or 5 hours, but I hope it's slightly better where you are. We've just been discussing between us, getting ready, Tom and Howard and myself, the sporting activities that are planned for this coming weekend, including the finals of the T20 cricket, which I'm not sure are going to go ahead. We are expecting a good number today, so it's only just 12 o'clock. So if you could bear with us while we allow others into the room, that would be great. While we are allowing people in, just a reminder, I expect you're all very familiar with these Zoom calls now, but at the bottom of the screen there is an ability for you in the Q&A box to ask questions. In a moment I'm going to be introducing Tom McSherry, and after the presentation we will have a Q&A opportunity. So if you could just put your questions in that Q&A box, that would be very helpful, thank you. And also in the chat box, it might be nice for you to just give us some idea of who you are, where you're from, what part of the supply chain, what part of the country. Gives us a flavour, and it gives particularly Tom a flavour of our audience, because as you know, the audience ranges from clients to contractors to consultants to manufacturers and everything in between, which is really good. So it's just after 12 o'clock. I think in fairness to those who are here, and we're nearly up to about nearly 50 at the moment, so I think we will make a start, ladies and gents. So first of all, thank you very much for joining us. These Friday lunchtime webinars are becoming a regular for some people. We've had well over 2,000 people tune in now since we started back in March, and that's great news. These are brought to you a combination of the Structural Timber Association, of whom I'm the Chief Executive, and also a group of CE regions. We've now been joined by CE National, but I'd like to say hello to my CE colleagues in the Northeast, in Wales, in the Midlands, and the Southwest. So it's a truly team effort bringing you these webinars on a Friday at midday. Now, today we're going to be talking about the very important and interesting topic of self-build and custom build. As we go through this urgent need for more homes across the UK, 300,000 and rising per annum, I think it's obvious that we need to consider the part that self-build and custom build is going to play in that building programme. So I'm delighted to say that today we've got Tom McSherry with us. Tom is the National Relationship Manager with BuildStore, and he's going to have a look at how the self-build, custom build should augment the building programme for homes going forward. And he has particularly, which is very useful, a huge knowledge of the financial part and implication. So that's where he's going to be concentrating. But I think without further ado, Tom, I'm going to mute myself, turn my video off, and I'm going to hand over to you, and I'll be back to deal with the questions later on. Thank you, Tom.
Thank you, Andrew. Thank you. Good afternoon, everyone, and hopefully it's coming across nice and clear. And as Andrew had suggested, we were discussing the weather, which unusually in Scotland is absolutely stunning today. So hopefully we will have some golf or cricket this weekend. Today's presentation, and I will try and hopefully share the screen very quickly. Hopefully working well. Whilst the headline is how self and custom build will augment the housing needs in the UK. I need to be really clear that it's important that my main role and focus within this is going to be how our role, and in particular how the finance is currently operating and how it's been developing over the last few years in line with self and custom build, which is an exciting time at the moment. Directly related to, of course, the STA, which we're importantly a member, and I want to touch on some of the important areas with the agenda, hopefully moving us forward. I can give you a bit of background and a market overview and where things are at the moment. And importantly, as I'm sure I can see, we're being joined today with a number of architects, that how design and construction methods can impact on the finance options. And by impacting, I'm talking primarily about how it changes the lender's view and appetite to support a given project or development, indeed, because I'm going to focus on both self and custom build today. We'll look at risk mitigating factors and the processes that need to be put in place to enable a smooth transition from what could be raw land through to a fully completed property. And then trying to get an understanding today, although a short presentation, what the solution-based products and how BuildStore has been working tirelessly with a product development team, really since inception, to enable products to meet the demand for the sector. And we'll look at some of the other opportunities as well, not just self and custom build, because there's many people, when times become challenged, indeed, then start to look at renovating and converting and extending their current home to something that's more fitting. And no time has been actually more relevant in the last 6 months, as people have established perhaps that their current home might not be fit for purpose in terms of living and working there 24/7. So without any further ado, I wanted to try and get some background to the market, and I think we need to understand the starting point. Self-build over the last few years has been running somewhere, depending on where you take the information, between 12 and 14,000 units per annum, and that's delivering around 9% of the UK's housing stock. Volume house builders, of course, having the vast majority. If you compare that directly into mainland Europe with Holland and Germany, Norway, Denmark, the figures are nearly 40 to 60%, and in some occasions up near 80% through self and custom build. So quite clearly, we're running behind, and there's real room for improvement, which is exciting. We, of course, have the right to build legislation, with the local authorities in England now having to maintain a register of people who want to be involved in commissioning and building their own home. Now, that then puts a legal requirement on the local authorities to bring forward sufficient plots with planning permission to meet the demand that's on those registers. Figures at the moment, it would appear, I'll come on to, and we're sitting around 55,000 on those registers throughout the local authorities, which is providing us a platform to build on, and indeed a real area where we can grow. Those local authorities, of course, some don't own land and will be enabling land or putting calls out for land, but some of them indeed are bringing forward their own sites, and we've seen some exciting developments already been brought to the market, in both down in York is a good example of a site that's got a mixed tenure, terrific opportunity, of which self and custom build is part of the delivery model. So it's an exciting time with the right to build legislation enabling and starting to demonstrate more demand. In the background, some other work that's been going on and actually came to light, particularly with the Conservative Manifesto, was their intention to extend the Help to Build equity loan scheme into self and custom build to help address the imbalance that there currently is in favour of the volume house builder. Not in place yet, but coming forward. So when that'll happen, I'm not sure, but it's certainly part of the manifesto. and certainly will be a welcome enhancement to the proposition for self and custom build in the finance sector. Part of the agenda, and I think importantly connecting into the membership of the STA, looking at superstructure. And before we started the talk today, I was asked a question by one of the hosts around, you know, how Scotland very much, we're all timber frame, but it's difficult to get a mortgage on a timber frame house in England. And perhaps therein lies some perception. And what I want to do is dispel many of those myths. BuildStore was born way back in the late 1990s. And of course, timber frame is indeed the go-to solution in Scotland. And for commercial needs, the members, of course, often designing a bespoke home that's not suitable to any other plot. We went about product design to enable and meet the demands that are commercially required for the off-site manufacturing and structural timber frame, because the system often has to be paid for before it leaves the factory. So indeed, there's been considerable support from the outset, and as an organisation, BuildStore distribute funds for a considerable number of the lenders exclusively, and all of those lenders support wholeheartedly timber frame, SIPs, construction. That's all of them. What is interesting is what changes is the external palette. Now, of course, Grenfell, of course, has really raised the head of cladding and materials, and that needs to be considered. But if we can take on board the starting point is that the structural timber system is wholeheartedly supported from the mortgage industry that we are part of and are exclusive lending partners. And then what we're starting to focus on is those elements that we wrap the building in. And the example that you see at the screen, where we have an element of timber cladding, perhaps zinc cladding. Architects, of course, bring to life the ambitions of the client and design something fabulous. But somewhere in this journey, the finance needs to be considered, because if it's got an element of a flat roof, the materials need to be considered. The elements in terms of cladding, whether and indeed to a percentage, becomes very relevant to the lender. So lenders supporting, some of them up to 25% timber cladding, some up to 50%, some up to 100%. So the client's desire is to have 100% timber frame, timber clad. That indeed can be met. But what it will do is reduce the number of lenders available to support the project. And I think what really is important is part of that customer journey through the design phase, and I'm speaking particularly on self and custom build here, is that palette needs to be engaged and discussed at an early stage to see what impact it has on finance. So it tends not to be the superstructure that's the issue. It's more indeed around the cladding and the percentage and the weighting of the material as we move more to lightweight construction and wrappings on buildings. So as part of that, let's understand what materials we want to use, and importantly, understanding the client's budget. You'd be surprised at the amount of times that a project's brought to the table for a 300 square metre house, and the client can afford to borrow £200,000 to build it. So there's been a disconnect in terms of establishing the budget for the customer. And I think bringing the budget to the start to really engage at design stage with the architect, that should work hand in hand, because at that stage, budgets can be clearly established, and the palette and materials can be considered as part of that discussion. So it's really where we are here to help, is that early intervention. Don't restrict the client's funding options by designing something that takes them out of mortgageability. How do we mitigate risk, and what are the processes that we put in place? Well, I think really importantly, whether it be a self-build or a conversion of a barn where we're sliding a frame down the inside of it to create the thermal efficiencies of the property, or indeed a renovation and extension, the budget is absolutely critical. And further down in terms of this is responsible build costs are really important. So that that often pound per square metre, it's important from us as a distributor of the lender's funds that we're protecting both the client, the professionals, and the lender from an unfinished project. And that often will come from irresponsible build costs at the outset, where we have a 300 square metre house and someone's trying to squeeze it into too small a budget. So we would implore that what we do is we change that around and set the budget and design to it. Important that we consider the client's contingency. One of the speakers at many of the events who retired fairly recently, he would highlight that it's very unusual for a project to go wrong catastrophically. You know, it's a gradual creep that happens, because this is a very emotive thing to self-build or be part of a custom build development, and it's important that we keep it on budget. But if there is a gradual creep, then contingency is really important, and that should be somewhere around about 10 to 15%, depending on the delivery model. Of course, if it's a fixed price, less important. Looking at risk mitigation and actually the opportunity that the sector has, I think going back a couple of decades, perhaps it was where a requirement where you had to already own the land. Certainly for the well-heeled second and third time house mover. But our product design team and our lenders, and when I talk about the lenders, I'm talking about regional building societies that predominantly support the self and custom build sector. And that support continues, where we now have lenders providing us, the vast majority are between 80 and 85% to allow your customer to secure the land, and 80 to 85% of the build costs. But one of our lenders now pushing up to 95% of the land and the build costs. And what that does is allow us to change. The smaller the deposit, we can change the demographics and increase the number of people who have the appetite to self-build and commission a build of their own family home. So as part of that, smaller deposits become helpful to volumize. A significant move to mitigate risk. The marketplace originally evolved through valuation-based lending, very similar to how it is in the development world, where if the lender did support the purchase of the land and the site, that was typically around 75%. What the customer and the suppliers and the professionals involved in the project then have to do is deliver the foundation package up to, in a timber frame facility would be DPC. The valuer would then come back and revalue the site. And if that was a £25,000 phase of the project, the valuer values it and only provides funds to the customer if the site value is increased. Now, in many occasions, that won't be the case simply by putting in foundations. And indeed, if there's a basement going into the process, that could be a considerable outlay, even on a sloping site where tanking is required. At that particular stage could be a fairly chunky outlay, but with no guarantee of funds back on a valuation-based process. So something we were very aware of that presented an increased risk and required the client to have a higher level of funding behind them to progress the build if increased, indeed the site value didn't increase. So BuildStore created a model way back in line with the timber frame off-site manufacturing providers, because there is that commercial aspect of you needing to be paid before it leaves the factory. And we created what was advanced stage payments based on costs. So that same scenario where the money is made available to secure the site, but in terms of when the foundation package has been prepared, then we bring the funding in for the off-site manufactured system into the foundation stage, because there's that payment to put it into the factory to start the manufacturing, with the balancing payment being made then to have it leave the factory. So we're creating that security for the off-site manufacturers to ensure that the payment schedule will be met and remove the doubt that is there when you're depending upon the valuer giving you money back after a stage to meet the contractual payments. So that was a significant step that was made, and support from our lenders to provide what was called the accelerator advanced stage payment model. In more recent years, as we've moved and evolved into the custom build opportunity, That same need was there where perhaps we have a council, housing association, SME builders, developers who are now starting to bring forward multiple plot sites. They need the certainty that when they've finished their phase of each stage, that they get paid for the work. So that same model we then transferred into arrear stage payment mortgages provided by our lenders, and brought in cost-based lending in arrears, so that when the stage is completed, we have the certainty that that 75, 85, 95% is paid on completion of the stage, even if the value of the site doesn't increase at that point. Again, mitigating risk within the process. And I think what's really important, there's no one size fits all for any project, unless we have with the exception of a schedule across a multiple plot development where a developer has set stages and we know what they are. If there's a variation in any site, what's really important is that there's tailored cash flow. Removing that doubt and ensuring that the client and the contractors and the professional, and if you're the developer or the architect leading the project, you know that the payments are going to be made to ensure that the end of the line, whether that be the professionals, the builders, the supply chain, that their contractual payments can be met because the cash flow has been tailored at outset, and we don't have to wait what the valuer is saying, fingers crossed, hoping that the values increase to meet the payment. These solution-based products, that early stage product change that allowed the advanced stage payment model where smaller deposits, that's the opportunity that allows us to change the demographics. It's the opportunity that allows milestone payments to be made, whether that be before or after each stage, but particularly to meet the demands of the off-site manufacturer, because the payment schedule on the advanced stage model is brought up in such a way that the payments are there to put the unit into the factory to start the manufacturing process, with the balancing payment made for it to leave the factory. That was a real game changer in the early doors, and in fact, it supported over 25,000 units since its inception. It removes the need for people to already own the land. It removes the need for large swathes of deposits to be available. Also, the product provides the money at the beginning of each stage. That's kind of what it is. What it does, and as a self-builder myself a number of years ago, for me it wasn't just about the milestones, because there are milestones, we talk about them, from the land purchase, DPC, the frame erected to wind and water tightening, first fix and second fix. My experience was, I had monthly payments to make to certain contractors. I had weekly payments I had to make. And in fact, been asked to go down to the builders merchants to buy materials at any given stage, having daily payments. Having the funds available at the beginning of each stage enabled us to do that. And it means there's less requirement in terms of running credit with merchants, etc. So it's a really positive step and risk mitigator, providing positive cash flow. And I say we're now up to 95% on that particular model. Actually, an event around the country, events we were doing last year and in the previous year, talking to a number of architects and highlighting not just the opportunity for self-build and custom build, which will come on to in more detail, but definitely the client that's looking to extend their property or renovate and convert their home. There's the perception that you're restricted to the current value of the house. If you have an 85% mortgage in your current home, that for ease of counting for me is worth 100,000, there's only 15,000 in there and not really accessible in the current market in terms of loan to value. So, restricted to any given loan to value in the current property can restrict the amount of work that can be done. But the products that I talk about as a self-build product, it's a stage payment product that's available for self-build, custom build, conversions and renovations. And the focus on for extensions is what's the value of the property when the work's complete. So we can remove the current lender on day one, and I'll show an example, and then provide the stage payments because we're going to have a new end value. So that's a particularly important one for the architects and designers who might find the opportunity to design something that's a bit more aspirational and not feel that they're restricted. And the client may have the opinion they're restricted by the current value of the property. We can indeed reach beyond that. A very simple example is where the current property value is 200 and a mortgage balance of 170. Even when 95% products were available in the market, and of course during COVID things have become a bit more challenging, only a further 20,000 would have been made available. And if we're talking about a design that's creating a £50,000 extension, there's a shortfall. However, using the advanced stage model, we can take out the current loan and provide the additional funds, funding up to 80% of the new value, removing that shortfall. So again, enabling a more aspirational extension and improvement to the current property. Covering off the finance elements there that we're looking at, self-building, conversions and renovations. Of course, the market's evolved, and with the legislation, we're starting to see more multiple plot sites being brought forward under the custom build banner. Definitely brings a wee bit more complexity because there can be multiple designs within the development. There's the funding requirement for infrastructure to unlock the land quite often and create the service plots. There's an absolute need for lender briefs. When we're talking about a specific one-off project, and I highlighted the lenders and the work that we're doing in terms of off-site manufacturing and materials and cladding, it's important that those lenders, to enable them to manage risk, we create a lender brief for multiple plot developments. So for housing associations and developers, if you're working as an architect with a developer, be aware that if this is a volume house builder, you would have 5 big lenders in play who would take up to around 20% of the site each. And what they're doing there is managing the risk in terms of the saturation levels. What's important on custom build is we do exactly the same thing. The lenders that we have, we will approach at an early stage, often through the design, considering the design features in the palette as already highlighted, but making sure that we have a supportive group of lenders that can fund the site before the site goes live. There's no point in waiting for a site to go live and then hope that the lender comes along, because we're managing not only saturation levels, but not just a spread of lenders, a spread of products. Both clients who need advanced stage payment, cost-based lending, perhaps might be able to work with valuation-based lending. So creating that platform from a finance perspective is something we've been doing for a number of years, and we can support whether you're an architect or a council or a developer going forward. That's something we've been working with councils for a number of years now, is creating that palette of lenders who have the range of products to meet the demands of the buyers for those particular units. From a custom build perspective, the delivery model can be varied, and we have, of course, we've seen an increase, and this will be some way in part played out by the legislation starting to drive forward. We're starting to see, of course, and have worked with housing associations and councils and actually volume house builders who want to allocate a certain allocation of their site for custom build. So all falling within that custom build banner, but can be brought forward in various ways. Service plots, of course, being one of them, where the site's enabled through an access road and services, and the individuals can work with the architect designing something that's quite often within a design code and a plot passport. Some can create some rules around the overall site view when it's completed. Customizable homes, of course, are another option that's open, where they can be configured in terms of the internal layout, and it might be something from an architect's point of view, that how the house is engineered that allows that internal change to take place. And of course, we have collective groups coming forward because the legislation has to consider us not just individuals, but groups on the register to bring forward overall developments for a collective group. So great opportunities. And the question was, how does self and custom build augment and support? Then I think what we have here is a real opportunity through self and custom build to start to increase the volume of what's currently been delivered over the last few years. It's giving us a new enabling developer. Creating individual self-build plots. We see that there's right up to a large site down at Graden Hill where there's between 1,700 to 1,800 plots. We see this across mainland Europe as a bit more of the norm. I was out the other year with the NAXPA to the Netherlands, and they showed some brilliant examples of multiple plot sites, but also developments of apartments. So the opportunity where they're simply putting in the roads and the infrastructures, securing the planning permission, and that can be delivered through a variety of methods via housing associations, the local authorities, which could be again like a site that we're working on just now, which is mixed tenure, where there's some self-build, there's some rental stock, a great opportunity to volumise. I hope you don't mind indulging at this point, but as an organisation, we have been around for quite a considerable number of years and innovating in terms of products and design to support the market as it evolves, and that continues. And about mitigating risk and ensuring from the start of the process that it's joined up, whether that be through setting the budget and ensuring the palette of materials is there to be supported, and what choices does it give the customer, whether you're an SME builder or developer or council or housing association. Come and speak to us, because there's a considerable amount of knowledge, having delivered a variety of projects over a number of years, providing an exclusive range of lenders who we work with. I haven't gone too much into products here specifically, because I don't think really this was a forum for it, but some of that product development has been really helpful, where our lenders have given us, for example, concessions of interest only during the build phase. So that keeps the cost down for the customer. Having an opportunity that the minute the build's completed, the client then gets the option to select one of the lender's normal residential products. So they're not locked into a self-build rate that's marginally higher than, well, in terms of the risk that the lender has, it's a higher rate, but they're switching back onto a residential rate on completion of the build with no need for further legals and variations. It's a product switch as part of the design. And some of the developments that have been brought forward now in custom build, where the client's actually coming in to buy at wind and water site and only has 2 phases. That might be a 3, 4, 5 month build period for first and second fix, and they're straight back to residential again. So there's a great opportunity being brought forward through the variety of options at both self and custom build. We have the opportunity, of course, our website, please have a look at it and you'll see some of the work we've been doing. And in terms of a partner directory for those architects, etc., that are out there, we're always looking for great examples of the work that you do, because it really does inspire our customers and gives them something perhaps where they struggle visually to create what they want. This is a great opportunity to use our gallery and social media to promote. So at this point, Andrew, I'm probably going to invite you to join us, and perhaps we could review some of the questions that have been coming in, and if I can possibly help, I'd be more than delighted.
Thank you, Tom. Very good. Thank you. If you'd like to unshare your screen, we can start the Q&A session. What I'm going to do is ask Howard if he would kindly get Stephen Clark and Chris Meadows onto the screen. Chris has got a couple of questions he wants to ask, and Stephen made a point before the meeting, sent it in advance. While we're doing that, there are a couple of anonymous questions which I'll pose to you now as we wait for Stephen and Chris to come on. So first question, Tom, many of the images that you've shown have been of beautiful homes in relatively remote locations, and for which I anticipate planning problems. For which I anticipate planning problems. Does he have any comments on site identification?
Identifying land's a particular skill in its own right. And there's a number of platforms for access. Plot search is another good example of a site where it's free. All the land that's on there that's been advertised has planning permission. Depending, of course, on which part of the country, I would embrace you to those there and their customers to go onto the right to build register. The more people that are there, the greater responsibility for local authorities to bring forward suitable land. One of the sites that the middle image, which was the start of the custom build, you'll see that that was a much more narrow site with less room, part of a multiple plot development. It's not always for bigger ones. You're right, that was a self-build example. But there are a number of multiple plot sites, and some of the housing associations and councils we've worked with, there's a greater level of density. But what really is there is an option in terms of the design and the style of the house and the internal layouts fit for your purpose.
Okay, thank you. Another question from someone who wishes to remain anonymous. Standard mortgage options are currently limited due to COVID, with many lenders asking for a larger deposit. Is this also the case with self-build, custom-build mortgage?
It's a really good question. The high street indeed has started to pull in the reins slightly during these challenging times. I can only comment on our own exclusive partners, of which there are quite a number. The support we've had since early March has been consistent. One or two have reduced the end loan to value very slightly. They've taken obvious stances for people who have been affected by way of their income. So if you are on furlough, quite clearly, that's a concern to any lending institution. And if you're on a reduced salary, it can impact on borrowing. But as we have, even since post-credit crunch, the level of support from these regional building societies into the self-build sector has been terrific, and has continued to be so. One or two have pulled out throughout the period. Some have come back in, and actually some of them, the demand that they have at the moment is significant in terms of general volume of lending. So the self-build sector, we have continued to have a robust support from our exclusive partners.
Okay, thank you, Tom. I'm going to ask Howard if he would please bring Natalie Han onto the screen. Now, Stephen Clark is with us. He hasn't got a camera, so we're not going to see him, but he is able to speak to us. So, Stephen, the floor is yours. Please ask your question.
I'm sorry. The question I already posted in the questions there. So look at it there. No, it was around the risk of taken on board by councils. Well, they generally, speaking from our own point of view, have many sites available. Having a lender come forward to work with us to make funding available to develop the plots up to the level where they become serviced is something that I think a lot of councils would appreciate. So from the BuildStore point of view, are there going to be lenders coming forward to help with that initial development?
Is it Stephen?
Hello.
Hi, Stephen. The unlocking of the site, there's a variety of, and I don't want to go into what there's funding available for councils in various parts that can be attractive. And depending on how the structure of the company that does it, of course, Homes England sits in the background, which has some specific funding for infrastructure. There are a number of lenders out there. It's certainly more challenging in the current times in terms of unlocking the site for infrastructure because many of the high street banks are not active, but there's a swathe of development funding lenders who have been more challenging during COVID, of course, because they equally have to manage their risk. But we've equally seen building societies step up to support. But each site has to be looked at specifically in its own merits in terms of cost to value, the legal entity in terms of who's borrowing. And I think probably taking a specific example, and it might be worthwhile getting in touch offline and giving me more details, then perhaps I could open up on that more specifically, because there's a number of options, but it depends on the structure of the organisation and the requirements, the loan to cost, the loan to value, etc.
Thank you, Tom. Stephen, are you happy with that, or do you want to come back?
No, I would be interested to see what organisations are out there that are looking to forward funding. Yeah, that's an avenue that would be worth exploring. Of course,
Stephen,
in Wales, we don't have the right to build.
No, of course.
So, you know, this would be a sort of private initiative rather than a public funding.
It's certainly an area the Welsh Government have been promoting is self and custom build as part of their housing model. So it's an area that we certainly have a number of inquiries.
Talking about Welsh Government, Tom, we've had something on the chat box from Luke Holloway saying, is there a similar register scheme in Wales? Does it operate in the same way, or are there significant differences?
There are differences, and with the same in Scotland. We don't have a register in Scotland. There's work to be done there.
Okay. Now we've got Chris Meadows on the line. Chris, you had a couple of questions. Would you like to pose those to Tom, please?
Hi,
Of course. Thank you, Andrew. Yeah, so the first one relates to self-build on rural exception sites. Just very briefly, for the benefit of anyone who's not familiar with the exception site model, the idea behind it is it provides land for affordable housing, which otherwise wouldn't get planning. Typically, it's agricultural land, and typically it sort of adjoins an existing settlement. Now, because it wouldn't get planning permission generally for open market housing, we tend to get that land at a highly discounted value. So typically anywhere between £7,500 and £15,000 per plot. Where I've been involved recently I'm from Haster Housing Association, by the way, where I've seen an increasing move towards self-build is actually quite often vendor-led lately. So I've had quite a few approaches from vendors of such land, which would typically be seen as rural exception sites, where instead of a payment or per plot, they're actually looking for self-build plots with planning, be they serviced or not, in lieu of payment. Now, from a financial point of view, for us, it stacks up pretty well because, you know, obviously we can make that site work, and the fact that we're not paying anything for the land obviously works in our favour. But it's just where that sits in terms of the spirit of the rural exception site policy, and also if there is I was a bit surprised that there seemed to be such an awareness of that option for vendors. So I wondered if you had any thoughts on that, and whether that's you know, if indeed it is something that's supported by local authorities and the government indeed, then is that something which perhaps could get further promotion or what have you? Because the value element seems to be a bit of a question mark whenever we ask that question about what the equivalent value of the self-build plots that we're enhancing become. Sorry, it's a bit of a rambly question, but hopefully you got the gist.
No, not for a minute am I a planner in any shape or form. What I will do is try and answer it from a finance perspective and experience. In fact, one of my earlier calls this morning was directly in relation to a site that's got mixed open market and discounted plots. And in fact, Shropshire had a particular scheme where the 106, it was a discounted plot, market value plot. From a lending perspective, that's something that's been getting supported for quite some time. And of course, from a lender perspective, if you're lending 85% of the purchase price of an open market plot and you're having a discount, then of course your 85% is of your discounted purchase price. And you can then borrow up to that 85–95% of the build costs on top of that. What they've often got beyond the discount is that there's a cap on, the house can never be sold in perpetuity for more than 60% of its open market value. which I suppose in many ways I would anticipate is the right thing, because it means it's always an affordable house and someone's not profiteering from that initial discount that went into the land. So I think there may be an opportunity for councils that identify part of their solution for affordable could be discounted plots. And of course, something, Andrew, of course, that the self-build industry, you know, has a perception of building real high quality, and the off-site structural timbers and thermal performance and the energy efficiency, all that does is allows a house that can be run at a relatively low cost. I think the two of them go hand in hand. If it's got a restriction in the value which might qualify by a local connection test and an affordability test, don't build a poor quality house that leaks like a sieve. Build a house that's well engineered and has great thermal performance. And I think there's a definite synergy between the two there. But I can only answer from a finance point of view that, yeah, we've supported the discounted plot.
Chris, do you want to come back at all?
No, that's good. I'll just jump on the second question's a lot quicker. You'll be relieved now.
Yeah.
So the other question relates to the planning route, really, and I appreciate you said you're not a planning expert per se, but just in terms of the financial approach, I guess, when we've got mixed tenure developments with self-build on, there seems to be a couple of different approaches that can be taken, whether that be outline for the whole site, detailed, and then the individual self-builders would then seek amendments to that planning, a hybrid of the two, or this plot passports. And I just wonder from a financial point of view if there was a preferred or recommended route.
Yeah, I spoke about the lender brief as part of the risk mitigation factors. So we see it coming to us in a number of ways. So it's more about understanding what whoever the solution provider is, whether it be the housing association or the council or the developer, what are the objectives. We've supported schemes with outline planning where the purchase takes place on the outline, and then the next stage payment happens when the detailed planning's in place and the design's approved. But what we're again on a multiple plot development, we've taken the scheme objectives and the material palette to the lenders up front, so there's an understanding. We've equally had sites where it could be a shell, a terrace, it could be a shell scheme, but the purchase takes place at shell, then you've got first and second fix. There's a number of varieties, and we've had to create solutions. These things tend not to sit on the shelf like a product. We tend to, because of the number of lenders we work with, take the actual scheme to the lenders for support.
Okay, Chris?
Yeah, brilliant, thank you.
Thank you. I'm going to ask Natalie then if she would put her microphone on. Natalie has a question.
Hi, Tom.
Hi there, how are you?
I'm fine, thank you. It's just a question regarding contaminated land. Contaminated land reports are typically being asked more and more as part of the planning approval process. But in my experience, lenders don't have an appetite to lend where the land is found to have contamination. Have you seen this? And if so, is this likely to change going forward?
Again, part of it will fall within planning remit and works to prepare a site to come forward. We would expect, and as lenders, they would expect the remediation work to have been carried out before they complete on the mortgage, rather than, you know, depending on what the contamination levels are and whether it's a gas, whether it's a previous industrial site, whatever it may be. Part of that, if it's multiple plot sites, and we have seen that where part of the enabling is to do that work, that's part of the first phase, the enabling section. But for individual self-builds, the lender would expect to see the contamination work taken care of, you know, and almost an aside to that, things like Japanese knotweed. It's not just about taking it away, it's about certifying that the work's been completed, so the lender knows the risk has been reduced.
Yeah. Okay.
All right, Natalie?
Yeah, I've got another question. Is that
Please
okay?
fire away. Just before you do, I'm going to ask Howard if he could bring Kate Paul into play, because Kate's got a question once we've finished with your good self, Natalie.
Lovely, thanks. And it's just another question on modern methods of construction. I think that's talked about, and very much an appetite for the industry to bring in more modern methods. And how does that play with lenders?
Yeah, it's a really good question, and it's one that it's quite interesting. What's a modern method of construction? Because if people wrap in structural timber as a modern method of construction, and we've been building with it for decades and centuries in some instances. I think what there definitely is a move to lightweight cladding. And in the earlier part of the presentation, what's really important is that knowledge that our lending panel wholeheartedly support structural timber frame, SIPS panels, there's glue lam, CLT. It's that wrapping that goes around the building is where we really like to engage with architects at an early stage to check what percentages are being used and what materials. And even some of the queue planning that comes through in agricultural buildings now, where we're changing what was a commercial building to residential for the first time, but the planning department wanted to retain that agricultural field. So, Tata steel from top to bottom and the roof, that will absolutely change the lender's appetite. So there's caution needed around the palette of materials rather than the superstructure, where we have got considerable support.
Thank you, because we're just in the process of applying for funding with BuildStore ourselves on a plot, and you've flagged some things that we need to flag. So thank you for that.
Thank you.
A very timely webinar then, Natalie.
Yeah, perfect. Thank you.
Thank you very much for your questions.
Thank you.
We've got Kate with us now. Kate, would you like to come online and ask your question of Tom? Kate, you're muted at the moment.
Unmute. Can you hear me?
We can hear you now. Yes.
Okay, yes, 1 second. Video is coming. Hello, everyone. Thank you very much for the lovely webinar. It's very, interesting and informative. So the question is, because I work, for constructing excellence, and as a movement, actually, we all are concerned about environmental impact. So of the built environment in general, and social value that we could provide and we could increase and improve, through all our actions that we would take together. So the question is about mortgages. So because from my perspective, for example, it would be very advisable if we could support and promote that approach between those who are seeking permission to build their houses. So if, for example, someone comes up with the ordinary normal house, for example, to build by themselves, they would get one mortgage option, and those who put special efforts into the design and build the house with extra caution, extra efforts to save environment, to provide solar panels, all around the house, or something else, maybe cleaning, purifying water systems, or whatever. So it can include. So would it mean that they would get some kind of discounted rates maybe on mortgages to attract the other potential builders in the same way? So to bring on the table the designs and projects that would would lower the environmental impact and decrease the social value.
You're muted, Tom. Tom, you're muted. Tom, you need to unmute.
Thank you. Can you hear me?
Can now.
Hi, Kate. Thank you very much for your question. And it's an important topic, of course, and one that in many ways there's almost two phases to it. And I was asked to do a talk about funding environmental projects. And it became more of a challenge than I thought from one point of view, because actually as I looked across all of our lenders, then they all support environmental projects, because the superstructure and the fabric first approach quite often creates much of that thermal efficiency to start with. And of course, as all of the lenders lend on, this, you know, Andrew don't mind, but structural timber frame, then we're already on board for this. What the client might incur is additional costs for things like solar thermal PV, rainwater harvesting, ground source heat pumps, etc., etc. So it increases their build costs. But rather than having a product that says, if you use these materials, you've got a slightly better rate, well, actually, let's just get a group of lenders and products that support the project. Because what we've done with all of our lenders is the minute the build's complete, is we're going to put them straight back onto high street rates. So they're not on a self-build rate where we could, for example, say, you're on this rate during the build and if you use these materials, we'll give you a discount after the build. We're actually, I think, doing better. We're taking them straight back to high street rates. So there's a transition that's it's a real difficult one, because actually, what is an environmental mortgage? Is it to support someone buying materials, or is it to have a house that you truly can't understand its performance until the house is performing, and how it's the first 3-5 years? What is the actual impact of that house? Well, we don't know until it's performing. So should the discount happen during construction, or should it happen based on the performance of the house once it's live? I've had a number of views from different people, but I think at the moment the way we have it, I think it's helpful in that there's an interest-only concession which keeps the cost down during construction, but then not simply saying you can get a discount because the house has got a performance level and, you know, a SAP value above 90 or something, but more, let's just give you a really good product again when the house is finished. I think long term there's maybe a bigger piece for the high street on how the house is performing. You know, the house is, if someone has taken that investment level and the house has for example gone off grid, perhaps it's the high street side of things.
Tom, the RICS are already looking at that as a topic in terms of valuation. It's a direction of travel, Kate, I think.
Yeah.
We're at the start of the direction of travel. The conversation is changing. I was in a meeting with insurers earlier this week, and they brought up the subject of net zero. I didn't even have to put it on the agenda. It was already there. Yeah. So I think people are aware of the topic. It's absolutely the top priority for all of us. But it's about embedding that into the way we operate. And that's not going to be a quick job, I don't think.
Yeah.
But certainly with my STA hat on, we would welcome a much faster move to environmentally sort of results, if you like, but from both mortgage lenders and insurers, taking into account the fabric first approach that Tom's mentioned, the energy efficiencies. And what's interesting, if you look at the self-build market, actually self-build clients are far more conscientious and aware of things like the environmental agenda. They're far more likely to take that into account when choosing what building material or method to use, because of course it's their pet project, and they are interested in long-term energy efficiency, as are housing associations, who also are far more interested in the method of build, a fabric first approach, which gives you energy efficiency. So we're getting there, Kate, but it's a long road, I think.
Yes, that would be great. Yeah, but I meant that encouragement, you know, additional encouragement to use those materials, you know, for those even who are aware of it, obviously, as you said, that because it's their like pet projects. I understand this, but if they have extra encouragement from the side, so that would be great. So it would, you know, the number of those who are seeking this permission, you know, with this kind of attitude to the environmental awareness of their project, so would increase it, you know, significantly, the number of those people. So, and in this case, we would feel impact of the self-build sector coming, you know, the right direction, much, you know, more, higher perspective.
I believe, Kate, there's a real desire for the net zero agenda to be front and centre. You've only got to look at the build agenda that we've got at the moment, courtesy of Boris: build back faster, build back greener, build back better, which is emphasising off-site construction, zero carbon, and the quality agenda. Those are the three priorities. And I believe that for the first time in my 40 plus years in construction, we're pretty joined up, thanks to the Construction Leadership Council, in having those three priorities of off-site, green, and quality. So I'm an optimist, Kate, and I think within Constructing Excellence we can help accelerate that agenda. There are no more questions in my box, and it is 1 minute to 1. So we've done this perfectly, Tom. So what I'm going to do now, ladies and gentlemen, I'm going to thank Howard and the team at Leaders Meets for hosting the webinar once again. A special thank you to you, Tom, for giving of your time and your knowledge. Judging from the questions, you can see how interesting it has been. It's always a good sign when we get questions that take us right up to 1 o'clock. So thank you for your time.
You're more than welcome.
Ladies and gents, if you've got any more queries, please do contact Tom at BuildStore. Final thank you to you, ladies and gents, for turning up and watching. I hope you've enjoyed it. Next week, we go to altogether different topic because we've got the furlough scheme coming to an end at the end of this month. So we're going to take a look at the whole topic of redundancies and maybe how we can look at it differently and maybe do things differently. So for those of you with personnel issues, please tune in next week at midday. But for now, from me, Andrew Carpenter, thank you for joining us. Wish you a good afternoon and a very pleasant weekend. Thank you very much. Bye-bye, everyone. Bye-bye.
Just before all